and India count down to the second high-profile summit in less than 6 months. Expectations are running high. There is confidence that President Obama and Prime Minister Modi will operationalize and further the commitments made in September 2014 in Washington, D.C. The U.S. ambassador to India, Richard Verma, says President Obama's Republic Day visit goes well beyond symbolic gestures and reflects the commitment to deepen the India-U.S. partnership. Now, pomp and ceremony aside, President Obama and Prime Minister Modi will try to find new ways to strengthen the trade relationship mechanisms which were put in place when USTR Michael Froman visited India last year. Defense and energy cooperation will be high on the agenda, and talks on contentious issues like IPR may also inch forward. So what will this indispensable partnership of the 21st century mean for trade and investments? Joining us today, former ambassador to the US, Meera, Shankar, Banmali Agrawala, the president and CEO of GE South Asia, Zubin Irani, president UTC India, WPS Sidhu, senior fellow foreign policy, Brookings India Center. Appreciate all of you joining us. Meera, Shankar, let me start by asking you about the need for deeper collaboration and deeper engagement. Let's look at it in the current economic context. The Indian economy is likely to grow at 6%, plus the US recovery continues to look strong at this point in time. The rest of the emerging market growth has been patchy and inconsistent, and the big beast, China, is slowing down considerably. In the present economic context, does it make sense for India and the US to collaborate much more? And also, given the future potential, are we likely to see this collaboration finally have more meat and bones around it?
But I certainly think there's an opportunity for India and the United States to strengthen their cooperation in the trade and economic realm. For India, the US is the single largest trading partner. If we take both goods and services, around $100 billion, sometimes it comes down. And the interesting thing is that services trade and trade in goods is broadly balanced with a small surplus for India. So for India, it is our largest single export market as a country if we don't take the EU, and we don't export to so many countries. So US becomes very important from that point of view. It's also been the partner which enabled the Indian economy to enter the high technology realm. If you look at the whole IT sector, which was the first sector to really take off and push the Indian economy into a higher growth trajectory, then the growth or development of that sector was largely because of the linkage with the US economy. And you can see that in multiple areas, whether it's biotechnology, whether it's other areas. So I do see that for India, the US is the indispensable partner, both in terms of exports of our goods, as well as in terms of technological and financial collaboration. For India, for the US, India is one of the big markets of the future.
Not indispensable.
Not indispensable, but certainly important, because...
And gaining in importance.
If I may also put it this way, and this is something which is not recognized, that the profitability of many US companies, particularly in the IT sector and in many other sectors, is dependent also on their linkage with India.
Okay, WPS Sidhu, let me come to you, because, you know, I'm going to quote you back to you. And you said with nearly 30 separate dialogues involving a range of issues from the TTP to the Trans-Pacific Partnership, do you believe we put enough meat behind the acronyms? And do you think that this is a significant milestone really in the India-US relationship?
It is, to the extent that the relationship is certainly deep and wide, but it really needs to be consolidated even further, right? So now I think we need to put more meat on those bones, and certainly from that point of view, I think the summit, on the one hand, is a very crucial symbolic indication of the leadership wanting to push this forward and build on the initiative from September 2014, which, by the way, was not a given. The two leaders were meeting for the first time. It could have gone in many different directions. It went in a very positive direction. On the other side, everybody now argues that maybe having a summit in less than 6 months is a bit too challenging, even with that kind of desire to push it forward, because you probably need a little bit more time.
So how much of this momentum is real? And how much of this is headlines?
Oh, I think the momentum is incredibly real from the point of view of the leaders. And frankly, if it hadn't been for that momentum, the bureaucracies might have fallen back into, well, we can do it at our own pace.
And to be fair, we have actually seen work being done by the bureaucracy.
Indeed.
Committees have been set up, whether it's IPR or investment. So we have seen the bureaucracy on both sides being activated.
Indeed. In fact, two issues, one of them you mentioned, on the intellectual property rights, I would have argued that the two sides may actually have been in a direct confrontation if they hadn't been forced by the summit to try and find a solution.
And that's the indication we got from the joint declaration in September.
Indeed, as well as from the WTO. So that's another indication as well, where they reached via media well before, the summit, because that was another, and indeed after the previous summit as well.
Okay, so you're both feeling confident and expectations, I pointed out, are running high. Mr. Agrawala, let me talk to you as an investor. And you've invested in India through GE, through down cycles, through up cycles. Things have gone your way, things have not gone your way, but you've been a long-term committed to India. The U.S. ambassador to India has talked about bilateral trade going from $100 billion to $500 billion. He hasn't specified a time frame, but that's the kind of confidence that the bureaucracy is exuding and the political landscape is exuding at this point in time. Do you believe that this is too ambitious, or do you believe that it's doable?
Well, I think if we kind of move away from numbers and not look at it in a very short time frame, the fundamentals as to why the expectation is there clearly is a need in the market. There clearly is a demand for products and services. I think American companies have the necessary wherewithal in terms of technology, in terms of solutions, which are relevant to this market.
But the need was there before as well. I mean,
That's right.
We've seen the U.S. economy now on the mend. It is recovering. So in that sense, the economic context may be different, but the need was there. What has changed so dramatically to inspire this kind of confidence today?
So clearly the political will behind getting things done, and the political will to get business going, and to kind of say to the world that, look here, we need investment, we need business to move forward. We first need to create wealth before we distribute wealth. I think that's the message that's kind of coming across.
Let me pick up on the conversation that we just had with Mr. Agrawala. And the point that is being made at this point is that, the government has articulated its promise on digital India, on the smart city project, and so on and so forth. And the manufacturing and the Make in India drive is the big promise that the government is holding out. And the finance minister, just today, in fact, has said that, we have to, from China, learn the art of low-cost manufacturing. And on the issue of, rebates as far as special economic zones are concerned, doing away with MAT and DDT, he said, I have to balance my books before I can look or consider withdrawing any taxes. From a foreign investment point of view, how real is the Make in India, the manufacturing in India story?
So, Shereen, I think from a multinational, I'll give you my multinational perspective. My company, United Technologies, we are, into manufacturing of air conditioners, elevators, helicopter cabins, aircraft systems in India today. We have 5 facilities. And I'll tell you, for us, and I know many other multinationals, it's really not an option to be investing and making in India. It's a necessity. And there are 3 reasons for that. Irrespective of what the environment might be. The first is we found that we can significantly bring the cost down. In some cases, 15-20% by making locally over here, and then pass that value to the consumers over here. The second is being more flexible and responsive. As an example, we can cut down our lead times from 3 months to a month by manufacturing here versus importing from a neighboring country. And the third and probably most important reason is manufacturing in India helps also design for India. Right. Because the products over here are very unique.
So you're basically talking about make in India for India.
Yeah, exactly. And I think for these 3 reasons, our belief is we have to, manufacture over here. Make in India is a necessity for multinationals to win.
So given the fact that we're seeing an upturn as far as the economy is concerned, 6.5% is what the World Bank is projecting for this year for Indian growth. Are you looking at investing significant amounts of money into the country to back any specific project, to back any fresh investments?
Frankly, Shereen, we have been investing over the last 4 or 5 years, even during the downturn for the reasons I talked about. We have, doubled our manufacturing capability in India overall, and now are looking at, a lot of exports as well. So I think, the current environment gives us even more confidence, right, to continue that.
But you won't give me a number of how much fresh money you're going to put into the market. Can I extract a number from you, Mr. Agrawala?
Well, I think that's entirely proportional to the size of the opportunity that there is.
So let's just look at the railway opportunity, because there you actually have seen tangible action with the government saying, all right, 100% FDI. We will probably get to see the nuts and bolts of it being revealed in the railway budget. But just from a railway opportunity, which was a sector that was closed for foreign direct investment, now that's opened up, what can we expect?
So it depends on what the policies are. But if, let's say, the Railway Ministry decides to modernize making locomotives, there's been a long pending project whereby diesel locomotives need to be modernized. If it were to go through in the form and fashion that it was envisaged earlier, I think an investment of 300 million to $500 million is easily foreseeable, depending again on the volumes and so on.
Well, on that note, it's time for us to take a break. When we return, we continue our special conversation here on Namaste Obama.